On Tuesday, November 4th, 2025, the stock market was down with major indices falling. The Nasdaq is down over 1.5%. The S&P 500 is down almost 1%, and gold is down over 1%, as the VIX volatility index is up almost 8%. So investors are wondering if this is a beginning of a bigger sell-off, what this means about the stocks and the assets they hold, and what they should be doing in response to this slowdown in stock market increasing, because this market has been in rally mode ever since the crash in April when the tariffs were first announced. So I'm going to discuss some of these broader macroeconomic trends, what's impacting the stock market, why it's falling, and what opportunities I see during this sell-off.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I have a year-to-date chart here for the S&P 500 index, and it's up over 15% year-to-date in 2025, which is a pretty good year if it finishes the year up over 15%. But we still have a couple of months to go, and the stock market can go either way. It can go higher from this point, or it could fall further from this point. Now you can see the big sell-off happened around April, and it started selling off around March because we started to get details that President Donald Trump wanted to announce tariffs and increase trade barriers against all of the United States trading partners. And of course, that's bad news for stocks, because that means that U.S. businesses that are importing things from outside the United States will have to pay higher prices on those imports. And so that will either hurt their profit margins, or if they choose to raise prices, it will hurt their sales. The end consumers in the United States will face double negatives. In one, they will see higher prices when they go to spend money on the things they're used to buying. And then on top of that, the decreasing economic activity will lead to fewer jobs available for U.S. consumers. As you can imagine, if Walmart is selling 25% fewer units, they need less people, they need less cashiers, they need less people at the warehouses, they need less drivers for deliveries, etc., etc. So all that trickle-down effect will hurt and has hurt the U.S. economy, and investors are now beginning to price in those negative impacts. The positives were that the central bank in the United States was cutting interest rates to offset that decline in economic activity. Remember, when the central bank lowers interest rates, it increases economic activity. The mechanisms for that is lower interest rates make buying things that need financing cheaper. So your monthly payment for buying a car would be lower if the interest rate is lower. And so it encourages more folks to buy a car. And if you buy a car, the salesman makes money, the dealership makes money. You maybe go and buy some things for your car. Maybe you buy some seat covers. Maybe you buy some insurance, more so than you already had with your older car. And that creates a increase in economic activity. Also, if you buy a home, similar impacts, but even larger if you buy a home versus if you buy a car. So investors were confident that if the economy slows down, the central bank will cut interest rates and there will be that offsetting impact. Well, the latest meeting with the central bank said, we're not so sure we're going to cut interest rates again this year, because while the economy is slowing, it's still relatively strong, and we also have to worry about inflation, which is increasing now because of the tariff impacts. The importers of these products now have to pay higher prices, and if they're paying higher prices, they're going to pass along some of those higher prices to end customers, and that's causing an increase in inflation right now, but it's also causing an increase of expected inflation. People are expecting inflation to be higher, and usually that's a self-fulfilling prophecy, because if you expect inflation will be higher next year and 5 years from now, when you go to make arrangements with your employer, or if you're a small business owner and you're making contracts with your suppliers and your buyers, you're incorporating those higher inflation expectations into your forecasts, into your pricing, into what you ask for your services. And so it's kind of like a self-fulfilling prophecy. When you expect higher inflation, you usually get higher inflation as a country, as an economy. And so that's the fears that are now increasing, because the central bank has equal two-sided risk. They're facing the risk of higher inflation getting out of control. They're also facing the risk of unemployment increasing because of the slowdown in economic output. However, uh, after a slowdown in employment in recent weeks, we had some anecdotal data that looked positive. But again, the central bank doesn't know for sure because the government shutdown has caused an elimination of some government reporting. And so they don't really have all the figures to make these decisions. And so the central bank chairman said, when you're driving in the fog, it's safest to slow down because you don't know what's ahead. And that's kind of what they're doing right now. They're saying, look, we don't really know what's ahead. So we're just going to slow down. We're not going to continue cutting interest rates. And that disappointed stock market investors who were already expecting that the central bank was going to continuously slow and cut interest rates because the economy was slowing down and they needed to offset that with slower interest rates. And so that's not happening. And so now investors are repricing the risk and inflation expectations along with higher interest rate expectations, and it's created this sell-off. Now, a lot of what's selling off or some of the most overvalued stuff is selling off more so than others. So stocks like Palantir, which by the way reported absolutely spectacular quarterly financial results yesterday, and I recorded a video about it, and it should already be published on my channel. If it's not already published, it will be so very shortly. Palantir reported absolutely spectacular quarterly financial results. Revenue is soaring, profits are soaring, orders and backlogs, customer growth, absolutely excellent. I didn't see one flaw in Palantir's earnings report, and yet the stock price is down today almost 7% following those spectacular results. And in the earnings preview video I did about Palantir stock, where I answered the question if investors should buy Palantir before the earnings announcement, and I said no, because while it's an excellent company, the stock price was so expensive that anything short of an absolute miracle, the stock price is likely not to increase because there's limited upside when your stock is already trading at a forward price to earnings of close to 250. And so there's huge downside if you report any question marks, which they didn't, right? I would hate to see what would have happened to Palantir stock if they reported poor results, right? It could have crashed by 40% easily and nobody would have been surprised. And so stocks like that, Palantir, Tesla, some smaller AI names like Big Bear AI, and assets like cryptocurrencies or anything related to crypto, all of those, I feel there's an overvaluation, over optimism from retail investors surrounding these names. And if this sell off should persist, I fear those are the names that are going to take the biggest hits. And already we're seeing that, right? Palantir down 7% when the market is down just 1%. Tesla's down 4% when the market is down 1%. These are stocks with higher betas that tend to move more so than the average stock in the market. And when things are going well, these stocks perform well. But when things are going poorly, these stocks perform way worse than the average stock in the S&P 500 or any other index. So I would be careful if you own some of these riskiest stuff in the market, especially those risky stuff that's overvalued. And I highlighted some names there: Palantir, Tesla, anything related to crypto, Bitcoin, all of that I feel are overvalued under current circumstances. And then what about opportunity? And I will tell you, I see plenty of opportunity. There are plenty of undervalued stocks that you can capitalize on amid this sell-off. A few stocks that I've bought recently include Amazon, The Trade Desk, Pinterest, Lululemon, and before that, I bought Uber, and then earlier in the year, I bought Nvidia. I still feel all of those stocks are undervalued, and the most surprising one might be Nvidia. You might think Nvidia stock is overvalued because the share price has increased by so much, but the big difference between Nvidia's share price increase and some of the other ones I mentioned like Tesla, Tesla's stock price has been increasing based only on hope and enthusiasm about what they will maybe do in the future. Whereas Nvidia's stock price has been increasing based on the profits and cash flow that they're delivering right now, today. They already have these products in the market that are already generating tens of billions of dollars in revenue and profit. Whereas with a company like Tesla, it's been a lot based on hope and promises and investors expecting that Tesla will deliver this technology and it will be some great thing, right? Where it hasn't really proven, it hasn't brought that to market, it hasn't generated a single dollar in revenue there. And so that's the big difference between companies like Nvidia and companies like Tesla, where I think investors need to make that distinction. And during these kinds of difficult environments is when these differences really show themselves. When things are going great, these overvalued stocks can continue being overvalued for an extended period of time as long as the music keeps playing. But when the music stops and there's this, you know, force to come to reality and investors have to make difficult choices, that's when you start to see the difficulty show up with some of these overvalued stocks. So that's where I would be careful. And I would be focusing my attention on these undervalued stocks that have good prospects, growth at a reasonable price, and not expecting things to happen without having justification for those things to happen. So try to be careful not to base your investing base too much on hope and enthusiasm and focus more on sound fundamentals and justifications for the valuations that you're paying. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.